Have you seen what's happening to the price of silver? It's going absolutely parabolic. And a huge part of the story leads right back to China. It seems like every time we look at the global economy, China is making a move that sends shockwaves everywhere. And 'tis time it's hitting the precious metals market like a tidal wave. For years, we've heard about silver being undervalued, the poor man's gold. But suddenly, the game is changing, and China is holding some serious cards. So, what exactly is going on? To understand this, we need to look at a few key things. First, China's industrial demand for silver is exploding. Think about it. Silver isn't just for jewelry or coins. It's a critical component in so many of the technologies that are defining our future. Solar panels, electric vehicles, 5G networks, all sorts of electronics, they all need silver. And who's leading the world in manufacturing all of this? China. Their push towards green energy and high-tech manufacturing means they are consuming silver at an unprecedented rate. We're talking about a massive, structural demand that isn't going away anytime soon. The more solar panels and EVs China produces for itself and the world, the more silver it needs to gobble up from the global supply. This industrial demand is creating a classic supply and demand squeeze. Global silver mine production has been relatively flat for years. We're not suddenly discovering massive new silver deposits. So, you have this steady, or even slightly declining, supply. And then you have this skyrocketing demand coming from one of the world's largest economies. Basic economics tells you that when demand outstrips supply, prices have to go up. And that's exactly what we're seeing. It's not just speculation. It's a real, physical shortage being driven by tangible industrial needs. But it's not just about factories and solar farms. There's another huge piece of the puzzle, the investment side. The Chinese government and its citizens are notoriously huge savers and investors. For decades, real estate was the go-to investment. People poured their life savings into property, believing it was a one-way bet. But now, the Chinese real estate market is in a crisis. Major developers are defaulting, property values are falling, and the confidence that propped up that market for so long has evaporated. So, where does all that money go now? If you can't trust property, and the local stock market is looking shaky, you start looking for safe havens. And what are the classic safe havens? Gold and silver. We're seeing a massive shift in investment behavior within China. Everyday people, the middle class, are desperately trying to protect their wealth from the fallout of the property bubble. They're turning to precious metals. There are reports of people lining up at banks and bullion dealers in China to buy physical gold and silver. This isn't just institutional money. This is a grassroots movement of millions of people trying to preserve their savings. When a population of 1.4 billion people starts to favor precious metals, the impact on global prices is immense. And then there's the government's role. The People's Bank of China has been on a gold-buying spree for months on end, trying to diversify its reserves away from the US dollar. While the official reports are all about gold, you can be sure they're also accumulating silver. For a country that wants to reduce its reliance on the dollar and assert its economic independence, holding physical, tangible assets like gold and silver is a strategic geopolitical move. They see the writing on the wall with global debt levels and the potential for currency, and they are preparing for a future where hard assets matter more than paper promises. This creates a perfect storm for silver. On one side, you have massive industrial demand pulling physical silver off the market for consumption. On the other side, you have massive investment demand from both the government and the people, locking up even more silver as a store of value. It's a double whammy. The silver that's being put into solar panels and cars is gone for good. It's not coming back into the market. The silver being put into vaults and safes is also being taken out of circulation. This situation has also exposed the fragility of the paper-silver market. For a long time, the price of silver has been heavily influenced by futures contracts on exchanges like the COMEX. Many argue that the amount of paper silver traded far exceeds the actual physical silver available. This has allowed for price suppression. But what happens when a massive buyer like China comes in and demands physical delivery? The paper games can't last forever. If you don't have the physical metal to back up the contracts, the whole system can break. China's relentless demand for physical silver is putting immense pressure on these paper markets, and could be the catalyst that finally forces the price to reflect the true physical reality. Think about the gold to silver ratio. Historically, this ratio has been much lower than it is today. It often hovers around 15 to 1 or 30 to 1. Recently, it's been as high as 80 or 90 to 1. Mianing ituk, 90 ounces of silver, 2 by 1 ounce of gold. This suggests that silver is incredibly undervalued compared to gold. As this new wave of demand hits, many analysts believe we are on the verge of a major reversion to the mean, where the price of silver will rise much faster than the price of gold to close that gap. So, when you see the silver price chart going nearly vertical, it's not just random market noise. It's the result of powerful, fundamental forces colliding. It's the story of a manufacturing superpower's insatiable appetite for a critical industrial metal. It's the story of 1.4 billion people losing faith in traditional investments and rushing into a classic safe haven. And it's the story of a government making strategic moves on the global chessboard. China's actions are essentially draining the global pool of available silver from all sides. They are breaking the old pricing mechanisms and forging a new reality for the metal. What does this mean for the future? Well, if these trends continue, the idea of silver at $30, $40, or even $50 an ounce doesn't seem so far-fetched anymore. Some of the more bullish analysts are calling for prices well over $100 in the coming years. Of course, nothing goes up in a straight line, and there will be volatility, but the underlying fundamentals, the industrial squeeze, and the investment panic are powerful long-term drivers. The silver story is no longer just a niche topic for hardcore metal bugs. It's a major macroeconomic event, and China is right at the epicenter of it. What is happening right now could be the beginning of one of the biggest bull markets for silver we've ever seen. Keep a close eye on this, because it's a fascinating and potentially very profitable story unfolding before our very eyes. Thanks so much for watching. If you found this breakdown helpful, be sure to hit that like button and subscribe for more deep dives into the global economy. Let me know what you think about silver's future in the comments below. See you next time.